how to manage your finances when you wanted to purchase a home.
This one's super exciting for us, and because it really kind of made us sit down and say, let's do this in a clear way. And also I want to point out now, go to the comments and you can find the link, because that's an exciting part of this one. So we're going to go through really what you need to do to make sure that your finances are in order so you can buy a house. So you're not afraid of buying a house, you are buying a house. And number one is going to be assessing your financial health and your financial well-being. So what is the first thing we're going to do?
Basically, we had the different videos, small videos that we first talk about how you check your credit report. Get rid of all of the errors that you have, like an address, your name. Sometimes it happens your name and your address is even that doesn't match with where you are and your credit card is coming from. And then pay off any dues or settle in the past or any judgment that you need to take care of it. No?
Absolutely. And then also make sure you have 12 months of positive credit showing up.
I
did have a lady who couldn't buy a house because she had a $12 thing that she didn't know existed that stopped her from buying a house. $12. So, I mean, check your credit report, know what's on there, and then take care of things, because that $12
Therefore, if you had any also late payment in your credit, when you wanted to get a loan, therefore they're looking at least 12 months of a stable, positive payment that is not past due.
The next thing you should do for your financial well-being is check your credit score. Oftentimes, it's not a secret so much anymore. Wells Fargo, Chase, credit cards, a lot of them are going to tell you what your credit score is online.
Experian app, you can get it, and you can get
your
all
score.
of them.
You maybe if your bank isn't offering and you have to pay a little bit to the companies, but it's better to know what your scores are so you can fix your whatever's going on there, because you need credit in order to buy.
Before we go to the next, we wanted to do our introduction.
Absolutely. So let's hit it. Hi, it's Alan Victoria. Welcome to our channel and podcast.
And if this is your first time on our podcast and YouTube channel, make sure you subscribe and get notified.
Also, you can call text all the time at 252-327-3357. We love talking to you. Don't be shy. Also, don't forget our buyer's guide and seller's guide in the description below.
Exactly. Therefore, first we're talking about checking your credit report. The second, definitely monitor your credit score.
Now what?
Especially. And the third things is really super important, working on your debt to income ratio.
Now this might be the hardest part for many people because you don't even know what it is. So basically what we want you to do is look at all your monthly payments and minimum for credit cards. So look for, if you owe $10,000, it's going to be what, 110 or something like that. It's really not what you're going to pay, but what the minimum is
for monthly.
For the monthly payment. What are your student loan monthly payments? What are your car loan monthly payments? What is your personal loans monthly payments? What are your alimony monthly payments? What are your child support monthly payments? Those are your typical debts. Add it all up and then look at how much income you make.
And also you can add your housing too, no? For example, if you're paying rent.
Well, housing comes later, but first look at that and then understand. Don't include rent because that's going to go away.
Yeah.
But so count up that and see what kind of percentage that is. And then we're going to add in a little housing, right? Because we don't want your housing to go. If it goes above 43%, you cannot buy a home with most programs. There is an exception with some programs, but typically 43 is really going to be hard. Now, for your financial health, they like you to be 36% or even 28%. If you're in the best financial situation, you want to be 28%. But otherwise, if you can buy and you have intention of growing and changing as an adult, 43 will get you into that home as long as but you have to do the math of what you owe. So debts matter.
Exactly. Therefore, if you want a simple math, basically is your gross income before taxes, whatever is your gross income is. And then adding all these things that my wife line up for you, like a credit, minimum credit, a monthly debt, your car loan, your student loan, any personal loan, everything, all of them is going to be divided gross by all of this, summation all of this is going to give you the percentage. But you can also go to some of the websites like a NerdWallet, Bankrate. If you have doubt and you say it's really difficult for me, and they ask you some question, you answer, and you come up with your debt to income ratio percentage.
Okay, so Next one we're going to talk about is budget. So let's just talk about things that you can do with budget. So number one, you want to determine how you can go online to all of these things. Even if you're on these websites about just looking at homes, you can see how much that house is going to be with monthly payments based on what your basic things are at sign. So consider your income, consider your debts, consider your financial obligations, but you can figure out how much money you can actually afford for a house. What else should I be saving for?
Exactly. The things that we need to save for is first down payment.
Mm-hmm.
You know? Therefore, we don't say, in many videos, we say 20% is like most of people, they think they should put, but really it depends on the type of loan. It could be FHA 3.5%. But if you wanted to get rid of your PMI or premium mortgage insurance, definitely 20% helps you to get rid of that.
Another thing to think about when you're budgeting is a closing cost, right? So typically it's going to be 2 to 5% of the closing cost of the price of the home. In here in our area in Greenville, North Carolina, it's probably, I'm going to say, between $5,000 to $7,000 for most of the homes around here.
Exactly.
It just does depend on the house. If you're paying more than that in our area, that's a lot. So what else? What else should you be budgeting for?
The mortgage insurance also, I wanted to add
that's coming later.
Okay.
That's later.
What
else, if you are planning on buying this home with gifts because, you know, your parents are going, or your sister or your brother, they're giving you money to buy a home, make sure that you understand what the guidelines for gifts are. It can't be a gift card.
Therefore, talk to your lender, basically.
Make sure you're getting letters that these are true gifts and they are not loans, secret loans, because they will find out. And what's another thing you're going to have to pay for?
And also remember that inspection and appraisal is separate fee from what you're paying for the down payment and your closing costs. Therefore, be prepared for those items too. No?
Right. The other thing in the next topic is going to be building a savings buffer. So we're not just talking about savings that you need for the house. I'm talking about a buffer. So for instance, life happens, emergencies happen, unexpected job losses, medical emergencies, things happen out of your control that you have no control over. And I hope everybody is fine at the end of the day. But have a savings for that. Make sure that you are okay to handle some sort of unknown situation. What else should you have money for, set aside for?
And saving for money for maintenance?
Yes.
Okay.
What do I mean?
Maintenance in general, they say 1% of the purchase of a home for a year. Like in our area, if you're purchasing an average $250,000, that's like going to be $2,500 for a year.
Okay, so I can say that also, let's just hypothetically say you want to keep your monthly payment down as low as possible. You're like, I like this area, I like this home, but it's a fixer-upper. It needs work. Even if the bones are good, can you afford the fixing of that home? And if you can afford because you've saved for it, amazing, then you can make the dream home that you want. So if you are considering making sure you buy the cheapest home out there, but you want to make sure that it looks awesome, you have to save money for that plan. You can't include the kitchen redesign that you want into the mortgage price. You have to kind of consider that as well.
Exactly. Now, after doing all these things that we said to you, really understanding the mortgage options is really important. If you are in a W-2, definitely you need to think about qualified mortgage, which is include FHA, conventional, USDA in our area too. And also, if you're veterans, definitely a VA loan.
Or do you want adjustable or you want fixed rate? Those are other options people are talking about.
And if you're self-employed also can be eligible for this qualified mortgage, but depends on your tax return and what the lender sees. You might go route of the non-qualified mortgage, something like a bank statement.
Right, so that is, you would believe you would qualify. So once you have you've done your research and you'll say, this is the type of loan I'm going to get, next thing is pre-approval for a mortgage. Make sure you have everything that they're going to need. So make sure you have all of your documentation that we were talking about, W-2, tax return, bank statements, most common, and know what kind of loan you want. FHA, conventional, like I'm going in because I want this program. What else should you do?
Basically, don't let anybody run your credit till you feel confident that this is the route that you want. Therefore, definitely make sure that. And if you do it and you know 2 or 3 lenders that you trust or you did already research, make sure in a very short window you do this, that your credit doesn't run for a couple times, you know?
Okay, so also shop around for lenders. But again, follow what my husband just said. Make sure you're not running your credit until you know what their rates are. You can kind of give them, this is my basic number, my credit score, what kind of rates. Understand that the rates aren't going to fluctuate too much. They will fluctuate some, but because, there's a federal guidelines and federal rules, but it's definitely going to be something that you can ask, what are the rates?
And then make sure, because they are obligated to give you in 3 business days a loan estimate.
That's once you've applied.
When you applied. And then make sure that you get that loan estimate, because that's how you determine for a specific house how much you need cash to close money and how much your monthly payment look like every month.
Next thing we're going to talk about, next topic, is you're going to plan for additional costs with your home thing. Understand mortgage is not just payment for the house plus interest on the house. There's also property taxes and home insurance that will be part of your monthly payment. If you are getting a loan with less than 20%, also PMI is going to be part of that loan. So make sure that when you're calculating numbers, you are including all of these things. And also, what's another one? HOA. If you are going to buy a home with an HOA community, know what HOA dues are. You can typically see that on all the websites, what the HOAs are. What else should you be thinking about?
And PMI basically is, if you wanted to know how much your PMI is going to be, almost an average of a 1.5%, which is a variable from company to company, but 1.5% of the basically mortgage.
What else should you be concerned about with home ownership costs?
Can you enlighten us?
Utilities.
Utility, okay.
Because depending on where you live, utilities can be there. Maintenance can also, you should definitely be saving 1% a year to make sure that you're keeping home up to date, but you want to make sure that your utilities are not going to eat into your other goals. What's the next topic we're going to talk about?
Please let us know.
Long-term financial goals. When you are making these decisions, make sure you are deciding long-term financial goals. What else? What does that mean?
Long financial goals is really where you want it to be, in the next 5 to 10 years. All of these things that we want to talk about, that you become a homeowner, really is financial stability for you and your loved one, And we know that also the house in general, historically, the last 40 years, 3 to 6% appreciate every year,
I'm just going to clarify what you said. Basically, if you're planning to retire, if you're planning a job, you're planning education, more education, or you're planning to grow your family, all of these things are something you need to consider with your goals. Maybe it's a benefit, and maybe it's going to say, maybe I shouldn't buy. So you have to kind of take those goals that you have in your life and think about it. What's the next topic?
Next thing is really educating yourself on the home buying process, which we talk about the finance and managing of that, and then the rest is going to be the real estate when you start searching for home.
Well, I mean, watching to this point means that you're already taking your online course pretty serious, right? You're taking your financial education serious. Also understand, we are real estate agents. We are not lenders. We are not here to tell you how much you can afford, but we can tell you what holds people back, because we see it all the time. And we help every day people buy their homes, and because we really are focused on helping people buy the homes that they want. You pick the home, we don't pick the home, because my favorite might not be your favorite. Totally fine. But what matters is that we are real estate agents, and we see it on the back end of what is happening all the time. Exactly. So what's our last thing that we're going to talk about?
Seeking professional advice.
Absolutely.
Which we definitely, from the money point of view, you definitely, if you have a CPA, you definitely need to have a consultation,
an honest conversation with your CPA.
Yeah.
Also, if you're talking to us as real estate agents, but you don't live in Greenville, we can still point you to people. We feel confident. We don't just pick somebody and say, oh, you're going to give us a fee, we'll send you a person. That's not how we operate. We operate based on who can actually give you the best information. We have a whole corporation with people nationwide, and we really do try to help people. And that is always our motivation and our goal, to really help people and to help you achieve your dreams. We hold a lot of our clients' hands through all of their financial journeys. We help people all the time, and that's really our goal, and I hope you see that with us and why we make these videos all the time.
Exactly. And don't forget to call us at 252-327-3357, Alan Victoria, and please subscribe in our podcast and YouTube channel and leave us a comment. We love to hear your thoughts, and see you in the next podcast and video.